Good morning, good morning. It is Wednesday, August 10th, 2022, and I am Kenny Polcari, and today is all about the CPI. That is, after we talk about what MU did yesterday, right? Micron Technologies. So Micron joined the crowd, right? He joined the semiconductor crowd, warning of slowing demand. The CPI is due out at 8:30 this morning, and investors are on the edge of their seats. Treasuries remain inverted, oil's a bit lower, gold is holding steady. And there are two Fed speeches today, right? Kashkari and Chucky Evans. Listen closely to what they have to say. And what do we have for dinner tonight? We're having cavatappi with a green pea pesto. Oh my God, delicious, simple to make, not expensive. You get the whole thing done in 20 minutes. Okay, so stocks fell yesterday for the third straight day as investors, traders, and algos processed the news out of Micron Technologies. It was another pre-announcement, right? Think of what NVIDIA did on Monday. The C-suite at MU had to make that same heart-wrenching decision. What do we do? Do we tell them, or should we play we've got a secret until the earnings day? Well, not unlike NVIDIA, that gave actual dollar figures on what the big miss was going to be, the brain trust at Micron chose to be a little bit more coy, saying only that revenue projections were just that, projections, and that there will be significant sequential declines in revenue and margins, and that the fourth quarter sales will be at or below the prior guidance. And that sent the stock tumbling by 3.8%. I'm actually surprised it didn't drop more. But it did drag the other chip stocks with it. AMD down 4.5%, Intel down 2.5%, Broadcom down 2 1/3, and Qualcomm down 3.6%. MU now joins NVIDIA, Intel, and the others in the space as demand just dries up, right? The majority of the pain being felt by the companies that make the chips for personal computers and high-tech expensive items. Now, just to be clear, there is this disconnect, right? CEOs, all reporting season long, not just the software CEOs, have been telling us that they are concerned, they are cautious, they are laying off workers, or at best slowing the hiring process. Inflation at 40-year highs and the Fed in the middle of raising rates at a swift pace is causing all kinds of angst for investors, CEOs, and the markets. Yet the government is telling us it's all good. Don't worry about it. So it is what it is. I just don't understand what the CEOs aren't seeing about this robust market, right? Is it the fact that anyone in the government hasn't really run a real world company so they don't have the experience? I don't know, right? It's a conundrum. In any event, the Dow ended the day down 60 points, the S&P lost 18, the NASDAQ down 150, the Russell was off 2, and the transports gave back 130 points. In addition, today is all about the consumer price index, which, by the way, is expected to show that inflation just might be cooling off a tiny bit. Core CPI month over month up 0.2%, year over year up 8.7%. And if you take out the volatile food energy sectors, then we have plus 0.5% month over month and up 6.1% year over year, which just tells you that inflation and things other than the necessities is still going up. But that's not important. Watch what the housing component says, right? The owner's equivalent rent, because that is real. And it is up month over month. It's expected to go up again this month. One-bedroom apartments in New York City with no closets are running at $5,000 a month. Rates in San Fran, LA, Chicago are surging. And in Middle America, Jeffrey Gundlach tells us that rent increases are up 40% year over year. I mean, I'm just saying. Expect them to celebrate the slight decline in the top line number. They will not focus on the year-over-year ex-food and energy segment that's expected to rise by 0.4% or 6.1%. And they won't focus on the owner's equivalent rent either, because that would just destroy the narrative. So let's just push that to the back burner. In any event, the conversation is going to turn to what's next for the Fed. Right? If we see that small decline, what will the Fed consider going back to a 50 basis point hike in September, or will they keep the 75 basis point hike on the table? But before you make that call, you have to wait until tomorrow's PPI report. What will that reveal? Remember last month it clocked in at 11.3%. Estimates suggest it's going to decline to 10.4%, which is still at 40-year highs. So I don't see how the Fed can back off just yet. They need to get to 4% by year end, as per Jimmy Bullard. And Loretta Mester tells us that she wants to continue to be aggressive until she sees a significant change in inflation, and that means more than 1 month of data. Today we're going to hear from Fed Presidents Neely Kashkari from Minneapolis, Chucky Evans from Chicago. Tomorrow you're going to hear from San Fran's Mary Daly, all non-voting members. But what they say could be all about taking the temperature of investors from the Fed, right? Will they hint at continued aggressive hikes of 75 basis points, or will they open the door to consider something less? Now, if either one of these reports, CPI, PPI, surprises to the upside, then expect the 100 basis point conversation to hit the airwaves again. Now, I give that a 20% chance of happening. I don't think that's going to happen, but if it does, then that's what would happen. Treasuries remain inverted, but apparently, once again, that's no longer important. It's not part of the conversation. No one even cares that they've now been inverted for 8 weeks. Oil ended the day at $90.42, and this morning it's down $1.20 at $89.30 after the American Petroleum Institute reported that inventories rose by 2.2 million barrels last week, and that suggests what? Let me remind you, it's demand destruction, right? It's comical. Keep your eyes on 88.97 because that's the key support level, right? That is the trend line, and $100.88 is resistance. So we remain in that trading range. Yesterday saw gold end the day at $18.12 an ounce, remaining above resistance. What was resistance now supported $18.06. This morning it's testing that support level, and it did trade as low as $18.03 earlier in the morning, but it has since rallied back and is trading at $1,807. Last week, I pointed out that the longer-term trend in gold suggests that it's poised to go higher. I still believe that. If it holds the trend line, 1806, then that's good, because then it will challenge a converging intermediate long-term trend lines up higher at 1865, where I suspect it's going to find resistance. So I think we're in that 1806, 1865 trading range. U.S. futures this morning are up. Dow futures up 75, S&P's up 10, Nasdaq up 30, Russell's up 2. None of this really suggests anything other than the market is expecting the CPI to be on point and not surprised to the upside. Look, until the Fed pivots and actually changes their stance, my sense is that the rallies that we've seen are not sustainable. I think there's more chop ahead. You know that. So I think you're just going with your eyes open. European markets are mixed, right? They're down between 0.1%, up between 0.2%, right? So they're waiting today's CPI report, clearly hoping for it to retreat because that might suggest that we've hit a peak. And then if we have, then maybe Europe is closer to hitting a peak as well. I think that's a stretch, but whatever. The S&P closed at 41.22, down 18 points last night, right? We're about to test the trend line support at 41.15. If what I think happens, then the markets will trade up today after the CPI report. Now, we remain in the 41.15, 43.35 trading range, right? It's a big range. We're smack right in the middle of both those trend lines. Listen to what the Fed speeches say today. See if they reveal anything between the lines. Are they suggesting anything at all? Because that will help drive the tone and then the direction. Okay, so we're having green pea pesto with cavatappi for dinner today. Oh my God. This is so simple to make and it's good, right? Remember, pesto sauce originated in Genoa, which is in the Liguria region of northern Italy. Liguria borders France, Piedmonte, Emilia-Romagna, and Tuscany, right? It sits right on the coast of the Ligurian Sea. The hills lying immediately beyond the coast, coupled with the sea, account for a mild climate year-round. Average winter temperatures are about 45 to 50 degrees, and summer temperatures are about 75 degrees. This makes it a very temperate place year-round, and as such, very popular. Right? Very popular among the paparazzi. Portofino lies on the coast just up from the capital of Genoa and is a destination for some of Europe's rich and famous. Now, for this, you're going to need a bag of frozen peas, fresh grated Parmigiana cheese, 2 cloves of garlic, a splash of lemon juice, a bit of chopped basil. You need salt and pepper, right? But don't use a lot of salt because the cheese is salty. You need olive oil, and then you need the pound of cavatappi pasta. Now, first, you want to bring a small saucepan of water to a boil. Add the peas. Just cook it until the water reboils. Just should take you about a minute or 2 minutes. Once it reboils, the peas are not frozen anymore. Just strain them, take them out. Now take the peas and blend all the other ingredients except for the pasta in a food processor like you're going to make pesto. Just blend it up and make a pea pesto out of it. Now set it aside. Now bring your pot of salt and water to a rolling boil and add the cavatappi. You want to cook that for 8 to 10 minutes until it's al dente. Don't overcook it. You want to strain it, keep a mug full of pasta water just in case. Put the pasta back in the pot. Add just a little bit of the water to remoisten. No puddle at the bottom. Now add in the pea pesto. Toss it so it's all coated very well. You want to serve this immediately in warm bowls. Always having extra grated Parmigiana cheese on your table for the guests. Remember, this is a simple meal. It's easy to prepare. Enjoy it for what it is. It's comfort food. That's what it is. And it looks great on the table, and it tastes so good. In any event, look, the day's about to get started. We got about T-minus 1 hour until we get the CPI report. The day is, it's a little bit cloudy out there. It's not a clear blue sky, and the sun is not out. So let's see if that's indicative of what happens in the market today. In any event, until tomorrow, take good care.